The Federal Reserve says the economy is now strong enough to let the Fed reduce its bond-buying stimulus program. That decision comes sooner than some investors expected.
Stocks jumped after yesterday's announcement. The Dow Jones Industrials gained nearly 300 points, ending the day at a record high. CBS News contributor and analyst Mellody Hobson is in Chicago. Mellody, good morning.
Good morning.
So this is significant. What do you think is interesting about it?
Well, I think it's actually very, very good. It shows that finally we have very clear indications that the U.S. economy is on much steadier footing. This is after a really tough slog. The Federal Reserve governors are looking at a bunch of indicators. Unemployment, 7%, better than people expected. They're looking at inflation that has stayed completely under control. They're even looking at Congress, who finally decided to play nicely and put together a budget deal that lays out U.S. spending for the next 2 years. So this is all a very good sign.
Mellody, stocks really ripped up yesterday. I mean, what is it that Wall Street likes about what the Fed is doing right now?
The stock market hates uncertainty, and that is what we've had all fall. Will they, won't they? It's been like this game of cat and mouse. Everyone's been waiting to see how will this happen? What will they do? They've been true to their word when they used the word taper. They said it would be measured. 10 billion is not radical. They're easing up on the gas ever so slightly. This is not a jarring move, and the market finally has some visibility how they're going to unwind the stimulus. And the other thing, the stimulus is still there.
I thought that was interesting, too, Mellody, that decision to unwind slowly, as you said, to sort of taper this, which the market seemed to like. And what about the assurance from the Fed on interest rates?
Well, they've been very clear they need to keep rates low because they need to continue to keep growth going. They know that they need to give businesses incentives to investment spend, to go out and borrow money to build plants, facilities, build inventory, because that will continue to drive job growth. They're targeting unemployment next year at 6.2 to 6.4% by the end of the year, which would be a great story. They also want us to go out and buy houses, which means mortgage rates have to stay down. Buy cars, again, so car rates stay down, go to school, which means student loans stay down. All of these things they're looking at in terms of rates, and I think that's actually really smart.
Mellody Hobson from Chicago, thank you.
Thanks.